to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax. And we're talking all about the importance of proper tax planning. We started a show a week ago that actually had such an amazing response that we decided to keep going with it. But remember, if you missed it last week, that's okay. You can actually visit the YouTube channel. But if you're just watching for the first time, you'll be able to follow along just perfectly fine. Phil, how are you today?
I'm wonderful, Cynthia, and I'm glad we're picking up where we left off last week. I mean, I was able to find 30 really good reasons to put money into a Roth right out of the gate. I couldn't find many disadvantages. And so one of the things, I mean, it seems like common sense, but why is it that common sense escapes so many folks in today's day and age? Are we just too busy with our day-to-day lives, do you think?
Yes, it's a hamster wheel effect. I really do think so.
Yeah, I tend to agree. So we're gonna just continue where we left off. As you may recall, we left off with eliminating surcharges on Medicare Part B and Part D premiums, which is extremely important. I talk with folks when we're structuring their Social Security maximization, and I talk with them about IRMA taxes, and I get blank stares. Many folks getting ready to either on Social Security or on Medicare or both, they don't understand what the IRMA tax is, how it's applied, how to eliminate it, how you get it. So I think we should talk a little bit about that.
Okay.
You know, when our legislators back in the early 2000s, but specifically in 2010, when they allowed us to do Roth conversions and Roth contributions, they really knew what they were talking about. They saw it. They realized that the pensions that they had, their own retirement accounts, how RMDs, required minimum distributions, were going to affect all of it. Now, of course, they don't have Medicare. They have different, but we do, okay? So with all of that, in addition to eliminating the Medicare surcharges, I want more control over my retirement income.
Of course, most people do, right? If not all. I mean.
So think about this. I mean, it's really a simple concept. Do you want control over your retirement income? Not just guaranteed. I'm not talking about annuities or any of that. I'm talking, do you want control? Do you want to make sure you have X amount coming from Social Security? Do you want to make sure that money you take out of retirement accounts do not cause your Social Security to be taxable, so you get to keep all of your Social Security? So this is retirement income control. So many folks think, I don't have any control. But oh, yes, you do. So again, it comes down to the common sense effect. And I want to exert more control over my retirement income. That's why all of my savings, retirement savings, and qualified accounts is all Roth. All of it in my wife's account is all Roth. All of it in my children's accounts are all Roth. Why? We practice what we preach, which would be common sense. And don't worry about the old saying. I love the old saying, penny wise, but dollar foolish. Well, that's what reminds me of when an individual contributes to a tax-deferred 401k. They're being penny wise today, but dollar foolish in the future. So again, tell your children and grandchildren to watch the show and give us a call. Come on in the office and let's help you understand how not to be penny wise and dollar foolish. We also want to make sure that we strategically structure our retirement tax bracket.
Okay. Very important.
So you have the 0% tax bracket right now.
Yep.
You have the 10%, 12%, 22, 24%. Hopefully they'll be able to make this bill more permanent, the Trump Tax Cuts and Jobs Act, because taxes will go up 25% in every bracket.
Yep.
But in retirement, I want to look at where I'm taking my retirement income so that when I file my tax return at the end of the year, I have control over what effective tax rate I am paying in retirement.
Absolutely.
All right.
Makes sense.
So the IRA and the traditional 401k eliminates our, let me put it this way, significantly curtails our ability to regulate our tax bracket in retirement.
Sure, because we're giving the government control, correct?
No doubt. No doubt about it, and no ifs, ands, or buts about it, because when they change the Uniform Life Expectancy Code, and by the way, folks, that's the code that the IRS determines what is your life expectancy at a certain age, how much must you mandatorily take out of that retirement account. When they change it, and they will change it, they're already talking about it, this is going to significantly increase RMDs, which is going to have a natural negative effect on a taxation in retirement. Now, I don't mean negative by reducing taxes. I mean negative by increasing taxes in retirement, especially Social Security.
Okay.
So with that being said, when we start to really line it up, wait a second, I put it in pay tax once out of every one of my paychecks. There's no limit on the amount of income. There's a limit on the amount based on my age that I can contribute, but it gets to grow tax-free for my entire lifetime. If I'm married, my spouse's lifetime. My children don't have to pay taxes if they inherit anything that my wife and I did not spend in retirement, as opposed to being taxed at any rate that could be unknown in the future. When I predecease my spouse, and we're no longer married filing joint, where she's filing a single return, I've not exacerbated her tax problem as well, because she's forced to take the RMDs. And now the kids are stuck paying taxes on these retirement accounts. It's a no-brainer.
Absolutely.
It's a no-brainer, and it's common sense. So really like that. There's also no age restrictions, by the way, on Roth conversions. And this is something that folks aren't clear on. I have folks come in and they say, Phil, you know, I'm 75, I'm 76. I started taking required minimum distributions, RMDs, a couple years ago. I can't do Roth conversions anymore. I missed that boat. And I tell them, no, you didn't miss the boat. It's just going to be a little more costly for you to do them because you can't convert, as we've said in previous shows, an RMD to a Roth. You can take the RMD. You can pay the taxes on the RMD, take what's left over to take a larger amount from that retirement account and convert that to a Roth. Now, next year, it won't be included in your RMD calculation. So we have, I would say, probably 1 out of every 4, 3 out of every 10 of our clients are doing Roth conversions while they're taking RMDs. So, folks, if you think that you can no longer do Roth conversions once you're taking RMDs, it's just a little more costly, but still just as necessary.
That's incredible. Well, Phil, we're going to take a commercial break, but I'd love for you to talk to the audience a little bit about what you have called the empowertaxbill.com. What can people do when they go to that website, empowertaxbill.com, put their information in? What can they expect to receive if they're wondering what their taxes are right now?
It's a fast track. So first of all, a calculator is going to come up, and it's going to give you basically an earmark on approximately what bracket you're in and what your taxes are going to cost you each and every year in retirement, especially based on what's in your 401k IRA. We help calculate the whole thing. We wanted to give folks an even better reason to call and come into our office. That will fast track you so that when you come into the office, you're not wasting time with multiple appointments before you get the information that you really want. In addition to that, when you fill that out and come in for your first 2 interviews, your Social Security and then your tax planning interview, we're going to give you a copy of our Ed Slate, The Retirement Time Bomb Continues to Tick even louder. Okay,
that's a great.
And it is getting loud. Fact of the matter is, when you read this book, you'll have a basic understanding of why it's so important. Now, most of you folks that have been watching us for years and years, I'm going to urge you, stop delaying. You know, it's funny. I have folks that I've been watching you for 4 years, and I wanted to pick up the phone. I wanted to, but I don't know. I just couldn't do it. Click the QR code. That's why we have that QR code. Come on in. As you know, there's no obligation to work with us. There's none at all. And however, there is an obligation to you and your family to become tax wise. And what we want to do is we want to help you retire tax efficiently. So give us a call. Dial 888-818-6557 and come on in and meet the team at Empower Wealth and Tax. You know, many folks will come in not just for the tax planning. They'll come in. They want to know about which Medicare supplement's best for them. We have our own Medicare division.
Sure.
You know, they'll want to know, we take a look at their taxes from last year. They want to get a second opinion. And of course, we have our tax practice as well. So whatever your reason, give us a call, come on in, meet our team, and become tax efficient retirement. Put a plan together, a written plan, something you can understand, something you can update year in and year out, and something you can be proud of. It's a takeaway from watching Retire Smart Austin.
Absolutely, Phil. Thank you so much to our viewers at home. Once again, that number is on your screen. That number to call is 888-818-6557. No obligation, completely complimentary. Come into the office, let Phil and the team get to know you one-on-one and what your plans, dreams, and hopes are for your retirement years. Once again, 888-818-6557. We'll be right back momentarily after this very short commercial break.
Hello, my name is Phil Capriotti. You know, some of the folks that come into our office are concerned that they might outlive their money in retirement. At Empower Wealth and Tax, we're able to address those concerns by answering your questions and by developing a comprehensive, tax-efficient retirement income plan. Now, this includes a cash flow analysis, a tax and risk assessment, as well as a comprehensive investment portfolio review. Remember, this is a complete and comprehensive analysis, and it's prepared by one of our licensed fiduciaries, absolutely free. As you know, we never accept compensation for this service. We simply want you to be educated and informed. So call us today or select one of the options below and start empowering your retirement right now.
Welcome back to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax, and we're talking all about the importance of proper tax planning for your retirement years so that you have control of your retirement income. Today's show is so important, Phil, talking about the importance of proper tax planning. Even in the commercial break, there was so much that we were sharing back and forth. One of the things that you wanted to talk about was how you can actually withdraw any time from the Roth. Talk a little bit about that to our viewers at home.
A lot of folks don't realize that. They don't realize that contributions can be withdrawn anytime from a Roth. You simply can't take out the earnings.
Okay.
So, I mean, this is a beautiful thing. Also, I can't imagine the amount of people. I've had literally dozens of people come in and say, my children really don't want to contribute to the Roth. They want to save every dollar. And it's really up to us to help them truly understand. Many times they don't understand the fact that they can access up to $10,000 of their Roth to buy a home.
Really?
So if you're contributing to your Roth,
that's incredible.
And you're a first-time home buyer, you can take up to $10,000 from your Roth to purchase a home.
That's fantastic.
Again, so these are, and every single year, and this is one of the benefits of being, again, an Ed Slott IRA advisor. This is all information that we learn literally on a monthly basis as Congress passes these bills.
Okay.
The other thing is you can take money anytime out of a Roth for education.
I love that.
So if you want to educate yourself,
okay,
and let's say you want to buy a home and you have money in a Roth, okay, and you want a continuing education, you can access funds from your Roth to do that. These are all benefits prior to reaching that 49.5. Again, we can't take the earnings out, but we can take the contributions. So knowing about tax planning and having our children understand all the benefits of having their 401ks and IRAs go into the Roth as opposed to the tax-deferred account, meaning the traditional 401k and retirement accounts, it's really, to me, there's a plethora of reasons to continue to make Roth contributions.
I know.
Pay it once, and there's a lot of different things I can do. You know, accessing your Roth for hardships. So many times an individual will happen where they've had a hardship exemption, okay? God forbid, an accident, major medical emergency. There's a whole list of criteria, okay? You can access your Roth, okay, again, penalty-free, okay, to help alleviate some of the pain that you might be going through because of a maybe unself-imposed hardship.
Wow.
Whether it be medical emergency, God forbid, accident, disability, that type of thing. So these are all additional reasons why it's important to have a Roth 401k that many folks simply don't talk about. Many financial advisors don't talk about it. Many CPAs do not talk about it. And in my professional opinion, these are the concepts and rules and regulations that we must talk about.
Well, the question is why? Why aren't more people talking about it? Because from what I'm understanding today, this can benefit so many people that maybe are unaware of this until today's show and, of course, last week's show as well. So why aren't more people talking about it, Phil?
I've said it before, and I hope I'm not right. I believe it's simply lazy. I think it's simply lack of education. And I think it's many advisors are one-dimensionals. And with all due respect to my fellow CPAs, we've been trained as CPAs to save the most amount of taxes money today, with not giving a care for down the road or planning ahead. We have to plan for all emergencies, not just tax-free retirement planning. We don't know what roadblocks or curveballs that will come at us in our lifetime. But it seems to me that when Congress passed this bill about Roth 401k and Roth IRA contributions, paying the tax once, if we do not have any type of issue where we need to take an early withdrawal, we can leave it in and let it grow tax-free. But if we are a one-time home buyer, first-time home buyer, if we need to take money out for education, if we have a hardship, if we have a medical emergency, having the ability to access these funds without waiting to 59 and a half, I simply believe it's a godsend. And
Absolutely.
I think anyone that's not taking advantage of it is just ill-informed.
Wow. I would agree, Phil. Absolutely.
Okay.
Absolutely.
This is a different show, isn't it?
It totally is. It's an eye-opening show.
Yep.
Because there are so many things that you're mentioning today that I've never heard of, including the first-time buyer program if they want to grab $10,000 out. That's pretty incredible.
Yep. And a lot of folks, and it's kind of funny too, because I was doing some, you know how much painstaking time I take when I prepare for these shows.
You do. I mean, it's like weeks on end.
We're just joking around, folks. It's actually kind of fun. Fortunately, you either know it or you don't know it. And Cynthia and I, we've been working together for the last 5 years, so we have a lot of fun when we get on here. But the fact of the matter is, it's simple things that I take for granted. And I'm thinking, I'm watching even other advisors listen to their radio shows and TV shows. I'm like, nobody's talking about it. We need to.
Yeah,
we need
absolutely,
to. Because I think a lot of parents and a lot of children and grandchildren out there don't realize all of the benefits. They're simply not being schooled. So what's the moral of the story? Pick up the phone, dial 888-818-6557. Come in to visit us. Let's talk about how tax efficient your retirement income plan is, and let's talk about how you're saving for not just retirement, but those unexpected emergencies that may come up between now and retirement. And remember, go on, hit the QR code. It's empowertaxbill.com. This was really a winner.
Absolutely.
I love it when the company came up with this.
Yes.
Click that empowertaxbill.com. Let's see what your potential taxes are going to be in retirement, and let's see what we can do about reducing them significantly.
Phil, thank you so much. The most important website that you can visit is empowertaxbill.com. You owe it to yourself. You've been working your entire life to get to the retirement years. You don't want that to be sidetracked by taxes that you're not planning for. Get to know what your obligation is today. Once again, empowertaxbill.com is the website that you'll want to visit. If you'd like to schedule a one-on-one consultation, please call 888-818-6557. We'll be right back after this very short commercial break on Retire Smart Austin with Phil Capriotti Sr.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax, and we're talking all about the power of proper tax planning for your future. Once again, if you missed that website, empowertaxbill.com, that's where you want to go today. Phil, this show is very eye-opening, and I know a lot of people are hearing this information for the very first time. It's powerful information that you're sharing. Talk a little bit about income and growth potential with the Roth.
Yeah, so remember, folks, as far as I'm concerned, saving for tax-free retirement is the main priority. Mm-hmm. But roadblocks and hurdles come along the way, and we know that. That's called life, L-I-F-E.
Absolutely.
But really, the ultimate goal is to save for a comfortable retirement. Many of our children don't believe in working till 65 or 70. Our Generation Z and the Generation X, Y, A, B, so whatever generation they are, okay, they believe in, I want it now and you owe me. Okay, for some reason, I guess we coddle and spoil some of our children. But the generation now doesn't see a life of working for 45, 50 years and then retiring, okay? For me, I believe that the essence of a happy life is work and helping others. That's for me. Absolutely. We do these programs to work and to help others, bring knowledge, education, and also the expertise that they may not be receiving from their current advisor, current accountant, or even a current attorney. But the ultimate goal is the investment and growth potential. Every dollar I put away into a retirement account, now think about it, I could take early withdrawals from a Roth. This allows our kids to do what? It allows our kids to save tax-free.
Love that.
By putting that money in there, it actually falls right into their goals and aspirations. It truly does. So if they have worked hard and they have saved hard, and if they have managed their 401ks in retirement, Roth 401ks and retirement accounts, this could possibly lead to the potential of them realizing their dreams and retiring early and tax efficient.
Wow, that's a win-win.
It is a win-win, and I understand Congress can change rules, but I don't see that happening. I think the reason they're opening these doors is they also understand, wow, if we let these kids save this money for decades and decades, literally, it could be millions, tens of millions of tax-free money.
That's so scary.
So let's give them an out since they paid the taxes. Let's give them a reason. But again, it comes down to compound tax-free growth, the way I look at it. The longer your money stays in this account, the longer it has the ability to grow. And with the way we're managing current portfolios, many times our portfolios, especially in our growth portfolios, a large cap growth and so forth, These portfolios are doubling every 3 years, every 3.5 years.
Wow.
Okay, so when we start to take a look at that compound tax-free growth, it's a win-win. Also, it's much better for long-term retirement planning because we take the tax hit right out of the equation.
Which is amazing. People are going to benefit from that because
we don't have to worry about
what it's going to be.
we don't have to worry so much about retiring in that much higher tax bracket.
Exactly.
Because we save tax deferred. I am a very big proponent in generational planning. I want to pass on. Don't get me wrong, folks. If you think my wife and I don't spend, oh, please, yes, we do. We like spending, but we like saving too. We like spending because we like saving.
Yes.
Now, but we also believe in passing some of this wealth, not just wealth, but knowledge onto our children and our grandchildren, along with this generational planning. I like the fact that whatever we don't spend will go to our children and our grandchildren, and they don't have to worry about paying taxes on it.
Fantastic.
And with the current law, they can literally continue that tax-free account for up to 10 years.
Wow.
So I would expect that our children and grandchildren, normally the acorn doesn't fall far from the tree. I would expect them to want to save and be successful as well.
Absolutely.
But I want them to be able to take tax-free money out without blowing up their tax bracket.
Makes perfect sense.
Big protection against legislative changes, folks. And I know we're getting near the end of the segment, but I got to give you an idea of you really need to pick up the phone or pick up your and dial or hit the QR code. Dialing 888-818-6557. Come in. Let's have a candid conversation with either myself, either one of my sons, or one of our other advisors. And let's talk about tax planning. And if you're not on a tax-efficient retirement income plan trajectory right now, let's talk about putting you on it. What different ways, what different methods, what different avenues can we travel down to help you plan your retirement much more tax efficiently?
Phil, thank you so very much. To our viewers at home, thank you for spending time with us today on Retire Smart Austin. It makes perfect sense that you want to protect the income that you've worked so hard for, and you want to make sure that you can pass it down efficiently and effectively to your loved ones. Take advantage of tax planning today. Visit empowertaxbill.com, empowertaxbill.com, or call 888-818-6557. Be safe and be happy. Be blessed. We'll see you next week on Retire Smart Austin.